everyone. Welcome to PayPod. I'm your host, Jacob Hollabaugh, and today on the show, we are talking about payment facilitation and how you, no matter how big or small a company you might own or be a part of, could possibly become your own PayFac or just facilitate your payments in a better way. And as a business owner myself, who knows, how much I'm currently paying my PayFac, I hear, the idea of a lower rate or additional revenue streams or just something working more for me versus for someone else. And I can't help get a little bit excited and really looking forward to this conversation. Joining me to explore those topics today is Caleb Avery, founder and CEO of Tilled, the PayFac-as-a-Service company who are empowering companies to monetize their own payments. Caleb, welcome to the show. Thank you so much for being here.
Yeah, absolutely. Thanks for having me on the show today. Excited to dive deeper into the world of payment facilitation.
Yeah, so are we, which, is one of we get the scope of the pod, kind of ebbs and flows within the payments and fintech world. But I always love being able to get really into the nitty gritty of one specific part of the kind of payments chain. And let's start with that kind of just as a little bit of an overview or reminder. With our listeners, we've got a kind of diverse group of listeners. There's plenty that are in the payments world themselves, even leading companies in the payments and fintech world. Many others are, business owners, leaders looking on the lookout for new financial services, technologies that could benefit their business. So for that latter group in particular, to make sure we know exactly what we're talking about today, could you kind of just explain the role of a PayFac within the payments chain and where they kind of fall in all of that?
Yeah, absolutely. So I always like to start out when you're talking about, what is a PayFac? Well, what does it stand for? We already kind of talked about it a little bit, but, short for payment facilitator. And I think, the reality is a lot of people are more familiar with the kind of big PayFac, Stripe, Square, Braintree, PayPal. But from an SMB's perspective, the PayFac is typically coming in and filling the role that, their ISO or the bank, was providing previously, providing them access to the card brands and the ability to accept payments at their business and ultimately receive those, payments within their bank account. I think one of the big differences within the PayFac model relative to the traditional, ISO ecosystem comes down to the actual way that the accounts configuration is set up for an SMB, where in that payment facilitator model, the PayFac goes through a very extensive vetting process with the banks, the acquirers, the card brands to get registered as what's considered a master merchant. And the difference there is that once that PayFac is set up in that master merchant relationship, they're then able to really create a much more streamlined, digital, oftentimes instant boarding experience for that SMB, which is typically considered a sub merchant underneath that PayFac versus the traditional ISO, ecosystem kind of PDF boarding processes, where, each SMB is getting their own merchant ID and just going through a much more thorough vetting process.
Love that. Thank you for that. And how is that payment facilitation typically been handled within the digital space specifically, kind of in the last decade or so? You've mentioned a few of the big players, but who are the big players that people would be familiar with, and what have been the kind of evolutions or big changes over the last decade as the digital wave is just, we've seen, however many waves. It's not just one at this point. It's just over and over and over.
I think there's been a couple of distinct waves of kind of evolution within the payments ecosystem. And the way that I think about it has really been a lot of changes within the way that payments are distributed to SMBs. So how are, the average SMB getting access, to payment processing, where, I started in this industry at 19 years old, going door to door. And at that point in time, like, that was the prevalent distribution model. It was boots in the ground. It was, crazy folks like myself walking into small businesses, offering them payment processing services, or, small business owners were going to their bank where they had their checking account, and that's where they were getting access to, their payment solutions. And the reality was, there were some advantages to that model, but there was also a lot of friction. And so you saw, the early players, Stripe, Square, Braintree, PayPal, coming in and offering this streamlined, maybe not frictionless, but certainly substantially less friction than the traditional kind of, bank ISO model. And so you had this rise of initially more kind of e-com, focused, payment facilitators. Square, obviously, with the dongle, started to move into the, physical space. But the latest wave that I think really has made the PayFac model more mainstream has been the rise of the vertical software ecosystem, where look, 10, 15 years ago, there weren't really that many prevalent, vertical software platforms, whereas today, every single vertical that you can think of, whether it's, trash management solutions or golf course management software, or, we've got propane delivery softwares, like every vertical that you can think of, there is a vertical specific, software solution for that. And I think that has been, really one of the bigger shifts that's happened over the last 5 years that has changed the way people really think about the PayFac model, and certainly brought it more into the mainstream, where for the majority of these software companies, they start out with Stripe or Braintree because it's 7 lines of code to embed into your platform to add payment solutions. But there's also a lot of drawbacks, both from the SMB perspective, but primarily from the ISV or software company perspective. There were a lot of drawbacks to that model, which kind of led to the opportunity here at Tilled.
Yeah. And speaking of that, before we go too much further, then can you give a quick overview of how Tilled came about? You started to kind of get into the story there, and then kind of what the services are that you're offering, how it all works.
Yeah, absolutely. So, at Tilled, for me, it really was born through my experience in the payments ecosystem. So, initially starting door to door, scaling up that business, but over time, I started being brought in on consulting opportunities for software companies that were coming to me, oftentimes with $400-500+ million of payments volume flowing through the platform, but $0 of payments revenue. And so they're coming to me saying like, hey, isn't there a way for us to monetize these payments and generate a revenue stream from all of these payments? And, historically, we would recommend, gateways like an NMI or authorize.net, and then help them negotiate referral relationships with one of the big ISOs. And, practically speaking, the legacy technology and the manual boarding process wasn't really what, these software companies were looking for. And one of those companies came to us saying, hey, well, what would it take for us to be a PayFac? And, a couple months into educating them on all of the upfront costs, the liabilities, the personnel costs, the technology investment, they decided they had no interest in being a payment facilitator themselves. And so for me, the kind of original hypothesis behind Tilled was, what would actually have to be true for a vertical software business to leverage the benefits of the PayFac model, but launch in 1 week. And so that was the kind of original thesis behind Tilled. And that became what we now call PayFac as a service, where companies take our turnkey white labeled payments infrastructure, embed that within their platform, and typically are up and running in a couple of weeks.
Wow. And is anyone else doing this? Are you kind of like the first of your kind to enter the PayFac-as-a-Service model or landscape?
Yeah, I would say that we were the ones that came up with the terminology PayFac-as-a-Service. And so we introduced the verbiage into the ecosystem. There were other players doing some variation of what we're doing that have now since adopted the terminology PayFac as a service. I would say Payrix was certainly one of the kind of primary companies that we felt as a competitor, especially prior to their acquisition by FIS. And then Stripe is obviously the 800-pound gorilla, in the ecosystem that, we get compared to in most customer conversations, most investor conversations, and frankly, half the podcast that I do, Stripe kind of comes up in conversation,
I'll do my best not
time.
to use them as the example on any other future questions. Because yes,
free,
it is the easy,
free.
well, that's the easy, one, just a reference to keep people's minds on the thing they know. But yeah, makes sense. All right. Yeah. That I actually had wondered then, were other companies doing it, but then the big, huge companies like that, were they not offering the kind of white labeled as a service solution? And do you think whether they were or not, possibly are going to see well, this is, a competitor of ours, we could do that too. We could, tweak the model or have that extra channel.
Yeah, I think most of the companies that people, if you're putting together a competitor matrix, would compare us against. At the time when we came to market, they were really offering more of what I would consider a PayFac in a box solution, and the distinction there being that they were offering the software companies the ability to go become a registered payment facilitator themselves. And so the difference in that model, they took what was historically a 2-year multi-million-dollar process and brought it down to about a 6-month, couple $100,000 process. And I think, what I realized as a consultant trying to recommend, these solutions, and I think they realized after a couple of years, of their go-to-market motion, that's a pretty hard sell to go convince, a company, even if you're making it a little bit easier and a little bit cheaper, it's still a lot of work. You're still hiring a team, you're still taking on liability, you're still responsible for all the day-to-day operations. And, then we come to market with this kind of PayFac-as-a-Service, concept. And it's all of a sudden, okay, well, this is now what, software companies are asking about and wanting. And so, we've certainly seen several of our competitors kind of pivot more in the direction of offering, a PayFac-as-a-Service solution, which I think is ultimately great for the market. And the reality is this is a massive, ecosystem. We don't have the capacity to serve every vertical software platform, out there. And so, I think it's been great to see, a handful more players. I think when you look at a lot of the larger kind of traditional incumbents, most of the major acquirers are PayFacs themselves, and they have not what I would consider a PayFac-as-a-Service solution, but they have an ISV focused solution that's an API with a console experience targeting ISVs. And the challenge that a lot of them were facing was that it was taking 6+ months to go integrate into their legacy APIs. And so when you're competing against a solution like Tilled, where we're at this point, I think we've launched, I don't know, 18 or 19, ISVs so far in the first, couple months of the year, and they've averaged a 9-day integration. And so, it's a night and day experience when you're saying like, look, at scale, we can launch a company sub 2 weeks, and then they're out there selling a 6, 9, 12-month, integration. I think that can be difficult, even if at the end of that, long integration, they have, an instant boarding experience. It's still a pretty tough value proposition for the ISV to say, hey, we're going to go lock up our developer resources for the next 2, 3, 4, quarters versus the next 2 weeks.
Yeah. And the end goal is the end value that you're really bringing then, as I understand it, is that because they can now do this and do it faster. Again, like you said, it's not, there wasn't really a difference to me when you said it's a 2-year process versus a 6 months. I'm like, that's still a long-term process. I'm right with you of like, that doesn't really actually it's not far enough. So then you're like, now I can do the 2-year thing in 9 days. The real goal, the end goal is that this adds a revenue stream. They start to be able to capture some of that payments money themselves versus it going somewhere else. Correct?
Absolutely. I mean, I think certainly the revenue stream is one of the key benefits. I mean, practically speaking, if you can double your revenue and do that, in a matter of months, that's a pretty attractive, value proposition for any, business owner to consider. I think a lot of times once these folks realize how much money they're leaving on the table, it just becomes something that you really can't ignore. I also think that there's benefits from, your relationship with your customers, where, oftentimes the kind of step that the folks were taking, they were leaving the likes of, Stripe and Braintree, and they were going into the kind of traditional, ISO referral model, and they were really introducing a subpar experience for their customers. Okay, hey, we're going to email you a PDF application. Here's a reporting console that was built in 1997, and the customer support is, a pretty poor experience. And like ultimately, that's not a great reflection on your brand as the vertical software, provider. And especially, as you're trying to compete against the larger guys, Toast and Service Titan, and these guys that have taken that step to go become a PayFac, themselves, and are offering, great pricing, a great experience, integrated reporting, all of that, it starts to be, a competitive disadvantage if you don't have, the right payment strategy as a vertical software platform. And we're allowing these companies to have, all of those benefits as though they were a big company doing it, in-house, but with substantially less, upfront effort and upfront investment.
Absolutely. And you kind of explained before why you chose this specific these software verticals that you did. Is there any other, are you trying to like, our focus is strictly there, that's where all of our growth can come from? Or are there other industry types, vertical types that you're looking at as, this was kind of phase one of the first place we wanted to get into? Now we could look at where the other growth opportunities might be. Are there any others you're considering?
Yeah, I think there's a couple of things there. I think thing one for us, when we started the business, we really started with, inbound organic as the way that, ISVs and software companies, were coming and finding Tilled. And one of the interesting things that we've learned over the last, 18 months or so, is that a lot of the traditional ISOs, as well as frankly the traditional acquirers, are really eager to get into this category. What we're talking about, the kind of PayFac ISV ecosystem is far and away the highest growth sector within the payments ecosystem today. And so at this point, we've got I don't know, something close to 150 ISOs that refer ISV business to Tilled. And so that has been a big focus for us over the last 18 months. And certainly, I think is only going to accelerate as more and more ISOs and agents and payments consultants, start to realize, what this can do, frankly, for them as individuals in their portfolio, but also the value that they can add, to the software companies that really need help, solving this problem. And I think as we have expanded more into that ISO ecosystem, more and more we're getting, these ISOs and agents that are coming to us and saying, well, hey, why can't I just board, my direct merchant business, with you guys? And that's not something that we've historically, supported, but certainly something that we're eager, to start supporting, especially as we release, we've got a next generation card present solution coming out. We're getting ready to release a tap to pay for iPhone and Android. And like, as you get more and more of those payment acceptance solutions, out there in the ecosystem, we as Tilled can actually provide a lot of value direct to merchants, not just going through the software partners functioning as that infrastructure provider. But I think by and large our real focus is on the ISV and software company ecosystem, because that's the biggest problem that I see in the market, and frankly the biggest opportunity.
Makes perfect sense. Let's say I'm one of those software business owners, and I've signed up using one of the big PayFacs. I won't mention any of the ones that always get mentioned, and we've already mentioned multiple times today, but I signed up with one of them at the beginning. It was just the easy thing to do, get up and running. What are some signs then that I should be looking for that tell me I'm ready to switch to something like a Tilled, or I should be considering making that switch and becoming my own PayFac?
Yeah, absolutely. I certainly think as you start to see your volume ramp up, that's really one of the first indicators that it's time to start looking, elsewhere. I think practically speaking, when you're just getting started and you're processing your first payments, you could make 100% of the margin, but if it's on $0, it doesn't really matter. But as you start hitting 5, 10, 25, 50 million a year, in payments volume, all of a sudden you're increasingly leaving more and more money on the table. And I think what we've seen, with a lot of our partners, they're coming to us because they've tried negotiating, with the folks that will remain, nameless and oftentimes struggle, or they say, hey, we'll lower your pricing by, 10 basis points, but you need to sign a 5-year exclusive contract, with us. And they're just hesitant, to make that change. I also think paying close attention to that customer experience. Like, are you really getting, the experience that you want to drive, for your customers, whether that's onboarding, whether that's customer support, whether that's reporting, funding times, whatever, the key thing is in your business, really paying close attention, to that experience. And then thing 3, it would really be, technology, where I think, for a lot of the companies that come to us, they've been partnered with WorldPay for years, and they keep hearing about things coming up on the roadmap, and, lo and behold, those things never materialize, on the roadmap. But for them, they're like, well, we want tap to pay. We want to add, Apple Pay. We want to be kind of on the forefront of, the technology, coming down the line. And, when you're partnering with some of these legacy providers, it can be harder and harder for your business to really, stay on the cutting edge of the technology that's coming out. Whereas, modern players like Tilled and some of the other newer players, we're just releasing features at a substantially higher velocity, than the legacy incumbents, that we're competing against. And over time, that really starts to become a pretty significant, either competitive advantage or competitive disadvantage, depending on who you're partnering with.
Yeah, absolutely. And the beginning that you mentioned the size, it makes perfect sense. Of course, if you're doing your first transaction, there's a lot more to be worried about or concerned about, maybe making those first transactions before
finding customers. And
yeah, exactly. But it does kind of beg the question, is there any specific size or scale that makes the most sense to work for you, or like a kind of a minimum size or scale where you're like, if you're below that, it's probably the value isn't actually there as much as if you kind of surpass this threshold? Or is
Yeah.
it kind of, if you have the resources, you've been in business, the size, you could still be a smaller company, but if you've got the time and resources, then you might as well add it in?
It's a great question. I think, when we first went to market, whatever 2+ years ago, we were typically saying, hey, 50 million a year was kind of the minimum threshold where it really made sense, to start looking at solutions like Till. But at the time, it took months for clients to integrate, onto the platform. And it was pretty hard to justify a startup spending, 3 months doing anything outside of their kind of core focus. Of their business. I think, practically speaking, as we continue to decrease the time that it takes for partners to integrate to Tilled, that barrier is getting lower and lower to the point where I would bet 20% of our customers today are actually startups processing their first payments on Tilled. It really just depends on how important that monetization strategy is, to your business and your story. And we're seeing a lot of these startups coming to us saying, hey, investors are actually telling us that we have to solve this problem before they want to engage with us, on a seed round. And so there's not really a minimum threshold. I think to the question about, is there kind of a point in time where it makes sense to potentially go become a PayFac? I think that one's a bit harder to answer in kind of a black and white, terms. I think generally speaking, I often say that about 2 billion a year is really the break point where I feel like economically there's an incremental dollar to be made by going and becoming a registered PayFac. But just because you can make an extra $10,000 a year doesn't necessarily mean you want to go, spend all the time and energy to build all it out and add the additional liabilities and complexities and compliance concerns. I think it's really an individual decision for each ISV where you really need to decide, why am I wanting to go become a PayFac? Is it economics? Is it control? Is it, my end valuation for the business? And you have to figure out kind of what that break point is for you, as an individual business. But kind of rough rule of thumb, that kind of 50 million to 2 billion a year range is essentially a no-brainer for them to come to us. And then outside of those, you have to kind of evaluate for yourselves what makes the most sense for your business.
And it's the total dollars coming through much more than the amount of transactions. It does it impact it in any way? If it's like, hey, we make 50 million on 10 transactions versus we make 50 million on 5,000 transactions. Is it mostly just the sum of money that's coming in that is the real driver there?
I would say, generally speaking, yes, the volume is the primary driver. There's certainly going to be some edge cases, to the contrary, but the volume and the margin, that you're making are typically kind of the two bigger drivers of when it makes sense to go either consider a Stripe or a Tilled or an alternative becoming a PayFac yourself.
Gotcha. Let's slight pivot here. We've kind of mentioned it a bunch of, the advantages and disadvantages of, being the newer, quicker players like yourself versus some of the legacy companies. But there has been this recent trend that you're obviously a part of a new as a service type of business. In the last half decade, especially, existed before the word came around. We kind of first heard SaaS and just software. And then in the last half decade, it's anything as a service. And now we're just starting to say literally everything as a service is just the new kind of buzzword, niching down, getting great, one specific thing, offering to do that specific thing for as many companies as possible. Do you think that business model is here to stay and going to continue? And specifically kind of in your world, do you kind of see that continuing and expanding? Or is there a point where you think those big giant companies, legacy companies, there might be some more consolidation that starts to happen of, I can't do that as well as these new people who have popped up, but I still, before I die out, I've got the resources to go bring one of those companies in or buy out them, bring them in. So do you expect, as the business owner, consolidation possibly on the horizon or continued expansion of this as a service type model?
Yeah, I don't know from my perspective, it's necessarily, either or. It isn't necessarily speaking one or the other. I think the reality is I expect both, of the trends to continue, where I think you're going to continue to see, the rise in the number of, SaaS or as a service, solutions, because it's lowering the cost of doing business. And it's allowing companies to do things that traditionally would have been prohibitive, for their business. I mean, practically speaking, a vertical software business doing, 5 million a year in payments, 5 years ago would never have considered the PayFac model as kind of a viable route, for them. But all of a sudden, enter all of the new players, and like that all of a sudden is something that, is available to businesses at any size and scale. But at the same time, these big guys aren't going to go down, without a fight. And I think as you start to see the valuations falling at the rate that they are, venture capital, drying up, and frankly, companies starting to run out of funds, like that becomes the perfect storm, for an M&A cycle. And so, I certainly expect over the next, call it, 2 to 3 years to see some pretty significant consolidation. Within the ecosystem. Payments specifically has been, ripe for, decade plus, from a consolidation perspective. And so I think it'll definitely be interesting to see, what the ecosystem looks like a couple of years from now, because you're going to see some big moves, by these guys. They're realizing like, look, the ground is shifting underneath our feet. The traditional agent ISO, distribution model, it's not going to die overnight, but it is certainly being impacted, I think, faster than they necessarily would have expected. It is being disrupted by, the vertical SaaS solutions that are really taking, the scene by storm. And they're saying, okay, well, we have to find a solution, to this problem. Do we build? Do we buy? Do we partner? And I think those are the conversations, that are happening at the executive level, at the board level, right now, trying to figure out, how do they compete, in the new world that's forming.
Yeah, absolutely. And I will say, selfishly, as the host of this podcast, it's the more the better from my point of view, simply for it's very fun to get to talk to someone like, oh, PayFac-as-a-Service. We haven't got to speak about that versus, the more of those different ones there can be, the better for me to get to learn about more and more little niche parts, different players, different pieces of the chain within the payments world. Final topic to kind of close us out on then. Whenever I have business leaders within the payments world on, I love to ask these two questions to finish related to kind of business and individual success in this world. And I'm especially excited to ask you, as someone who a younger leader, but has, as you referenced earlier, spent your entire career within the payments world from, I think you said 19 onward. Yeah. So what would you say in all those years, the different companies you've interacted with, now all the different many clients you're interacting with now with Tilled, what would you say are a few key characteristics about a company that stand out as indicators they're going to be successful within the payments industry?
Yeah, I'd say for me, one of the biggest indicators of success are the folks that truly understand and are passionate about the problem that they're coming out to solve. I think, I get the opportunity to meet with tons of founders, both in the work that I'm doing at Tilled, also over the last, number of years, I've invested in quite a few, startups. And so meeting with founders, and I really want to start out and understand, like, what's your story? Why are you passionate about this? And like, really, I want to understand the problem, that you're going after and solving. And, my experience has been that the folks that intimately understand their customers, intimately understand the problem that they're solving, and then are just passionate, beyond belief to go solve that problems are the ones that are able to overcome, the obstacles and persevere and succeed.
Certainly. And then that was kind of company and individual level, but taking it down to just purely the individual level, for someone newer that might be working in this industry, what are a few personality traits, skills that you think either, helped you find success and get your footing in this world, or that would set someone up for success over their career in this world?
Yeah, I'll go something that I underestimated at the start of my career and has paid tremendous dividends for me over the last couple of years. And that's really just networking in general. I think for me, I didn't realize how small the payments ecosystem was. And, now more than a decade in the business, it's like you go to the Southeast Acquirer show or, ETA Transact, and it's like all of a sudden you're like, this feels like homecoming. And I know thousands of people, that are here. And the reality is it's such a small space that, you make friends, you make good connections. People move to different companies over the course of their career. And if you can, make a good impression and make, good connections, that can pay tremendous dividends, over the course of your career. And so if you're a kind of younger person considering coming into the space, or someone who just joined the ecosystem, don't sleep on the value of building out your network within the ecosystem.
Love it. And be thankful you don't have to go door to door, because I also kind of had an internal laugh earlier when you referenced that of like, we're the last generation that doesn't think that's absolutely insane and crazy. The idea of like, yeah, your job is just go around and knock on everyone's door and then talk to them about your thing, your business, or whatever. And now anyone younger than us would be like, that's That seems like that person might need some help. Like, I don't think you're supposed to do that, are you? So I got to chuckle out of it.
My kids are probably not going to be door-to-door merchant, salesmen. That's probably not going to be their job.
We have iPhones now. I don't know that we need to go door to door as much. It doesn't quite make as much efficient for the business. Well, Caleb, this has been a great joy to get to speak with you. For those listening who might want to follow you and keep up with what you've got going on or Tilled's got going on, where would be the best place for them to go to do so?
Yeah, so if you're interested in following me, Caleb Avery, LinkedIn is certainly the best place to follow me, learn more about the PayFac model, my evolving golf swing, my kids, just follow along the entrepreneurial journey. If you want to follow more about Tilled, certainly Tilled on LinkedIn is a great place to go. Our website's also incredibly informative. We've got a great blog, tons of resources, and a lot of content to help get you started.
Love it. We will, of course, link to those and more all in the show notes. Caleb, thank you for giving us your time and knowledge. It's been a real pleasure. Hope to speak to you again sometime soon.
Absolutely. Thanks so much for having me on the show today. This was a blast.